Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The start of 2024 for the Australian dollar has failed to stage any significant moves and presently holds above the key support area seen at 66.65. In light of the pattern, though, there is a bit of bullish divergence, so any weakness towards this area should eventually see demand and take it back towards the top side call of 67, 70, 80 to 68, 30, 35 as the broader target. In economic data, the Australian CPI release comes in lower at 4.3% year on year, missing the 4.4 forecast. We also wait now for China's CPI data on Friday. But before then, we also get the US data, which is a key point, as the latest US inflation figures, being the CPI and also the PPI, could give the investors another read on the US Federal Reserve's rate view, with much anticipation of a cut in March. Looking at the euro, the market is still somewhat directionless, but still holding clearly above that support line, which is seen around 108.2035. With the dollar being somewhat lacking direction, I feel that we could see eventually a move back towards the recent call of 100 figure to 150. Therefore, should put further upside potential and see a move on towards 109.90 to 110.60 or even higher to 111 for a broader target. The dollar yen, since that surge to the upside and lost momentum, is still trying to attempt to take on the challenge higher. I still feel the market is attempting to squeeze out any short positions and therefore eventually see a market drop. It's a typical pattern that normally eventuates before key numbers and then eventually see a move back towards the support area, seen somewhere around 143.25 and then down to where the key area is around 140 or the broader target at 138.5. The British pound encountered modest losses on Tuesday as profit taking appears to be emerging ahead of the Bank of England Governor Andrew Bailey's speech on Thursday, while also the focus looks on to Friday's UK GDP release. No doubt the market will be a little bit whipsawed as we head into those events, but I feel overall the bulls will eventually take the market higher, given the fact that the weeklies have been strong for some time and also the uptrend, which was recently breached, may actually attempt to bring on more bullish or demand and lift the market on towards its objective somewhere around the region of 128 figure 30 or on to 130. Any pullback, the base I view is around 126.10.15. And also gold was directionless overnight and still weighing a little bit on the support, which is seen somewhere around 2022 to 25. We've got a couple of mixed candles in here, but nevertheless, I'm not at this point abandoning the topside call of around 2060 as a challenge. And therefore, while the support is intact at 2022, then the upside case remains. And let's see if the market does claw its way back up towards 60 and then eventually maybe take it a dive. But at the present, there is still a little bit more in terms of upward momentum coming through here, but the mixed candles and also the somewhat heavy MACD has given it more of a lackluster price action. Wrapping up with oil, well, the market rebounded and finding support close towards the region somewhere of 70.25.45. In the rebound, I like the way this pattern continues on, and that is to a bullish case, and look towards $74 or even up to the broader call of 75, 60, 90 and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday port. I hope you enjoy the rest of the day.